Hey guys, and welcome to another video of Johnny's Calculated Brain, the TradingView Toolkit. And the primary reason behind today's video is an exciting feature update, a new module, the reversal candles module. And this module has been built around the concept of spotting tops and bottoms, which many people struggle with, and it also works across multiple timeframes. So what is this module? It's an added algorithmic candle map layer, which basically maps potential reversal points around swing highs and swing lows. The module basically would read the recent candle sequences, relative ranges, the body directions at candle close, whether a candle sequence is expanding or contracting, and it will condense all that information into a compact pattern, which is then read and then plotted on the chart. As you can see here, you've got some number sequences here, you've got some number sequences here, and these numbers, they don't really have much context for you. They do for me in terms of the calculations behind it, which is why I didn't give them a generic label. But basically it's sequencing which then leads to a candle, and then that sequence determines whether it's a valid potential reversal point or not. So really quickly now, getting into it. So as you can see, the output, for example, here was a plot 222. So it caught one of the sequences that I would usually look out for. Here's another one, 221. Again, these numbers don't mean anything to you, but they do to me. Yeah, so it caught another reversal sequence here. So essentially what it does is it would output what many, professional traders would scan for visually when looking for tops and bottoms, and entry points for their trades. Of course, you'd use it with the rest of the confluence layers, the broader market structure, the context, which we've covered in a lot of detail in our first video surrounding the toolkit, where we've covered every single module in extreme detail up until now. So I won't go back into that, but basically it adds to the confluences you're looking for entries and stronger entries. So that's what professional traders would scan for, but they do it visually. They'd kind of look at sequencing, how candles are forming, and then they'd look for pivot points, and if it matches the sequence which you usually get used to looking at over the span of a few years, or some people create rule sets around candlestick sequences, at that point that they would enter trades, or they'd wait for a secondary confirmation and then enter a trade after the initial patterns being confirmed and the initial pivot. So basically that's exactly what it does. It does what professional traders would visually do, mapping it out all visually, mathematically calculating it, putting it all together, all in their brain, but it will basically do all of that and plot it for you on the chart. So for those who aren't familiar with candlestick patterns and sequencing, and I think we covered that in the previous video, but candlesticks are essentially just they're basically raw numbers displayed into a visual form, which is why it makes sense for these sequences to actually follow an algorithmic pattern, because every single candlestick is essentially maths. So you need a mathematical layer to read them, otherwise you can't read them. So yeah, if you didn't have candlesticks, you'd basically just have raw numbers displayed all across your chart. So that's basically what candlesticks, and there's other forms of candle plotting as well. That's what they do. They visually make things easy to read for you, and we've basically leveraged that, and we've made top and bottom hunting just as easy. But it's not a cheat book, it's not a hack, and we'll cover some real examples as we go along, and I'm aiming to keep this video very short, just covering this module. For all the more detailed stuff, refer back to the previous video and watch that in detail. I think that's over an hour in length, so more than enough content to absorb off the back of that one. So yeah, it produces these, consistently follows a set of sequences, patterns that I've basically plugged in there, things that I would look out for, how I caught the sequencing when I caught the top on gold and silver alike, when I'm looking at major pivot points, things like that. So that's what it helps with. So what you're basically going to see, and by the way, this works across any time frame, so any time frame you switch to, it will do the same. Obviously the lower the time frame, like currently I'm on the 15-minute chart, the noisier it is. The higher the time frame, the less noisier. But obviously 15-minute, 30-minute charts are ideal for day trading and short-term swings if you're executing off these time frames. If you're executing, let's say, off the 4-hour chart, then you're looking to hold a trade open for days before you get your desired risk to reward ratio. But with smaller time frames, you cover, you capture the micro moves in between the larger moves, and you get your risk to reward targets quicker. So yeah, different types of traders, different types of trading methods. Some people prefer less noise. Some people are okay with holding trades for multiple days, but in the current market environment, I'm not. So I'm using the lower time frames. I'm getting in and out of trades outside of our larger swings that we're currently undertaking. But yeah, that's just me rambling. So what's shown on the chart? So you've got your compact pattern strings. Above, as I've said, they're basically these numbers just represent the sequence before it actually plotted it. It helps with debugging and a lot of other things, but to you it won't mean anything. Just know that if a sequence plots above, below, then that's a potential reversal sign. So it summarizes the candle behavior and it leads into a turn. There's pivot break levels and things like that, but you've got various other bits for pivot breaks. Now let's cover an example from gold. Let's see. So yeah, let's just use this from Friday? Yep, Friday afternoon. This was around New York time. So yep, that was sort of New York beginning. The move started playing out. There was a bit of chop. As you can see, you had your potential reversal signaled by the plot here, but we didn't enter there. We waited for a range break out of the range box, at which point I was alerted. And then from here, that would have been your entry, and you can see how that's gone. Now here you had another potential reversal plot because the candle sequences did match up. And as you can see, it was valid, just it was very small retracement, which is why context and structure matters. You can't catch every reversal thinking it's going to keep going in, zigzags and perfect zigzags. It won't. Another example, let's say, for example, here you had, this is today, I think. Yes, it is. So here you had a reversal signal or a potential reversal plot. And then it broke the range. This was a valid trade, but the timing, this was sort of when volume was dying down, but still, you can see it's still suppressed under the range break. So this may well be still a valid trade for gold. Here, there was, there was great confluence here because as you can see, this was a continuation of the move that started all the way up here. Now this was your initial reversal, potential reversal candle here. It was hogging the trend line. Now it came to, but yeah, it was hogging the trend line. You had a few breaks, but not much volume during the European session today. And then you had another potential reversal of this candle here, and then you had a range break. So if you put, let's say, your stop here below the trend line, you did have a decent trade. So yeah, this is the 15-minute chart. So obviously these are in and out. If you're executing off a 15-minute time frame, most likely you'll be out of the trade within 2 to 2.5 hours. I don't think you'll be in a trade any longer than that. And by then you would have reached your risk to reward target if you've got the trade right. Otherwise, we probably hit a stop by then. 30-minute chart, less noisy. I haven't actually published a new update yet, but I will do, which is why it's a bit slow when I'm switching to each new time frame on the initial load. But again, you have your daily low here. You had a perfect bounce off, reversal plot, a potential reversal plot 3, and then range break. You could have put your stop here, and again, you could have wrote that as well. Same thing here. You had really good confluence here actually, because you had a tap and rejection off a bearish brain zone, as you can see here, and then a plot at the top. And then after this rejection, this was confirmed as a valid rejection by this plot here. Then we waited for a range break. So this would have been your range break here. You could have put your stop somewhere here. And then the trade continued in the correct direction. So you had a lot of confluence there. So initially you had a bounce and rejection off a bearish brain zone. Then you also had a potential reversal candle plotted off the back of this candle that was rejected there. As you can see, after that you even had a trend line break prior to the range actually breaking. So you had 1, 2, 3 confluences if we include the trend line break, and then obviously a very, very good trade down. So that was gold. Let's have a quick look at oil, because oil is very popular at the moment. Let's go back over to the 15-minute time frame. Just makes it visually easy to see things. Right. So let's see, oil, we had, again, another confluence. So we had a wick into the bullish brain zone here. We also had the candlestick sequence plot a potential reversal. Unfortunately, in this case, by the time a range break took place, most of the move would have already taken place, because oil is a very volatile asset. So I personally wouldn't have entered this, mainly because of the impulse here, although a valid trade. But because it's off the smaller time frame, I probably wouldn't have taken this one, as most of the move would have been exhausted here, as I'm on a smaller time frame. But here we had another potential reversal, and this one did break range here. That was a good range break. It was a decent sized candle as opposed to the previous. We had a reversal plot here from the candle reversal module, and then after that, obviously price continued as it should have, and we had multiple other matching reversal plots here, and price did continue down. Now here we've currently got another retest of the bullish brain zone, another reversal plot. It does look like it's reversing now after this range break. If it manages to break it, oil is likely to continue higher. If, however, it breaks it to the downside, then most likely it's looking to mitigate these 1 hour brain zones that you have. And do watch the previous video if you don't know what I'm referring to as brain zones, but they're fair value gaps essentially. But why they named brain zones, you'll have to watch the previous video to actually find out, because we've covered all of that in extreme detail there. So those are two examples. So we've covered examples. Now let's quickly go to indicator settings. Now, when you initially load the indicator, you will basically have everything enabled that I have by default, except for two things that I normally change, just for visual clutter. So normally you'd have the VWAP lines enabled by default. And what that does is it gives you your VWAP lines, what VWAPs are, what they're helpful for. Again, you'd have to watch the previous video, but as you can see, it adds quite a few lines to the chart. You've already got your VWAP levels here in the dashboard, so you don't always need the lines. So just to remove clutter, because we've got other modules which also use, line-based plots, just to prevent too much noise and clutter, I do disable these and then I enable them when I'm looking at VWAP context. When I need to, I just go into style and I enable them when I need to enable them. And the only other thing I've changed is under inputs. Obviously we've got brain zone set to 1 hour. That is ideal if you're looking for day trades and short 1 to 2 day swings, or holding a trade beyond just over a full day. But the one other thing I've changed is the extend zones higher time frame bars. I've set this from 80 to 336, and the primary reason I've done that is because brain zones or fair value gaps on an hourly time frame, or which have been created off an hourly time frame, statistically 90% of them are already either retested or mitigated by the time you reach that many hours and bars. And for the ones that aren't, the 10 to 15%, they might never be mitigated or never be revisited again. So fair value gaps and brain zones, they won't always be revisited. There will be many that are just never revisited again. So yeah, but you can read up on the concept of fair value gaps and things in your own time. Or your looks like it's going up, please do, because I've got a trade open at the moment, which is in profit, but still. Okay, so we've done that. What else was left? Alerts. Yes, so we've also got alerts for when these plot, these reversal handles when they plot. Although I personally wouldn't use alerts for those, because my main entry trigger isn't a potential reversal candle. It's after something has broken out of its range. So I use range boxes as alerts. We've already covered that in the previous video as well. But I use range breaks. So range break on the 15-minute interval against my watch list, once per bar close. That prompts me to look at a chart, and then visually I look for confluences, and I decide whether a trade is valid or not. So I use range breaks. But if you did really want to use these plots and set up alerts against just the plots without waiting for an actual confirmation, as you can see, it's always good to wait for confirmation. Like you had a reversal plot here, then this would have given you confirmation when that candle broke out of the range box. At that point you would have been alerted. You would have still had a trade for the day. It's always best to wait for confirmations. But if you were creating a brand new one, you can either set it against your watch list that you've created or against a particular asset. I'll set it against the entire watch list. But yeah, you just select the indicator, or the condition, sorry. So you select the toolkit as the condition, and then reverse candle, pivot combo, whichever time frame you want it to look at before alerting you. So let's say 15 minutes. And then trigger you set to once per bar close. Do not set it to once only or once per bar. You will get alerts mid bar. Only set it to once per bar close for any alert that you set for anything. And then you just create, and that's it, you're done. But currently I've got my alert set to brain zone retests and off the hourly. So brain zone retest, on the hourly interval, and I've got my range breaks on the 15-minute because I'm executing off the 15-minute time frame. So in short, that is the new module, and it's enabled by default, but if you did want to disable it or re-enable it, it's just here under enable reversal candles. And yeah, I think that's the end of the video. One thing I did uncover in the previous one was moon phases. For anyone following lunar phases, these plots that you see, I'd probably have to switch to a higher time frame for this. But yeah, these plots that you see, these blue moons and these yellow moons, they're basically new moons and full moons for those who do use lunar cycles as part of their trading strategies. But yeah, even here you can see great reversals caught by the reversal candle module. Again, you had a double confluence here. You had an exhaustion, and you had a potential reversal plot. So this went on for these are 4-hour candles, so this went on for a while. But yeah, it's a great addition to what was already a very powerful confluence toolkit, but now it's just become even more powerful. And that whole question of, is this a valid reversal candle? Is this the correct entry? Is this the turning point? Is this a good pivot? All of that has now become easier. So yeah, these sequences behind it, it's the stuff I look at. I visually map it out. It took me roughly 2 weeks to get this all done, so that pattern matching and all of that actually works. I've back tested it. I've tested it live. I've done all of that. I'm using it right now actually on 2 trades. I think one was for gold and the other was for oil. But yeah, that's basically the new module in short. So we'll wrap this one up. This video obviously wasn't as long as the first one, but for anyone who wants a full overview of the entire module, watch the first video and then watch this current one. And oh, that's the bit I kept forgetting. So just one thing to put out there, like, feature updates aren't being added for the sake of it. They're only being added when I think or feel there's an additional feature that I can introduce to improve the toolkit for yourselves without causing visual clutter and noise. Only then a new feature is implemented. Maybe this is the last feature, I don't know, but unless I think of something which is actually really helpful and something that's practically buildable and something that works, unless I can do that, then there's no point just shipping features out. Features are only as good as what they do. I can put 100 different modules in there and it won't give a single percentage of extra edge, but with what we have and what we have implemented, every single module serves a unique purpose or complements confluences. So yeah, that's the video done in short. Thank you guys for watching, and yeah, have a play around. Bye.